Welcome to the Embedded Finance Review podcast. My name is Lars Markol. Today, I'm speaking with Dr. Manuel Thomet, who is Associate Partner at Synpulse. Manuel and his team published the very first study about embedded finance and banking as a service in Switzerland. The study was conducted with an academic partner, and you can download it via embedded-finance.ch. In this podcast, I'm speaking with Manuel about the embedded finance landscape in Switzerland, what outcome of the study surprised them the most, and where Manuel would put embedded finance on the hype cycle. Let's dive in. Hi, Manuel. Welcome to the podcast. How are you doing today, and in what part of the world are you actually located in right now?
Hi, Lars. Good to see you. And thanks for having me on the podcast. I'm doing fantastic. I'm in Zurich in the Synpulse office, and outside the weather is not that great, but I'm very much looking forward to our podcast.
Same here in Berlin, so maybe even better we spend inside and talk about a very exciting topic, obviously, embedded finance. And we chose for this interview to talk a little bit more specifically about embedded finance in Switzerland. And of course, there's a very specific reason for that. You and your team, you have published the very first study about embedded finance and banking as a service in Switzerland. I think you had a nice launch event of the study as well a couple of weeks ago. So you want to dive into that. Maybe first open a question. What was your learnings, or maybe the most interesting learnings that you got out of the study?
There are actually a couple ones, but let's maybe highlight some of the most important ones. So first and foremost, I think we could show that consumers in Switzerland, they are ready for embedded banking. So over 75% of Swiss consumers have used embedded finance offerings at least once. Mm-hmm. And we could also show that the so-called tipping point is reached in 3 out of 5 banking service areas. So what does it mean? The tipping point is basically the point where an innovation is being adopted by consumers. Mm-hmm. And in payments, pensions, and investments, in those areas, the tipping point has actually been surpassed significantly. But also in 2 other ones, like savings and financing, the tipping point has not been reached, but we're very close to that. From a different angle, if we look at the different embedder types, we saw that neobanks, they are the embedders with the greatest kind of attraction so far for consumers, and then followed by digital platforms and SaaS providers. And lastly, traditional firms, which are still a bit in the starting phase of embedded finance. If we look at banks in Switzerland, innovative banks are already adopting the business model banking as a service. So the study shows that more than 35% of surveyed banks are expanding their existing business model portfolio with this additional business model banking as a service. We also saw that implementing BaaS business model, meaning having an adequate operating model, is not that easy. Mm-hmm. So it requires changes in the mindset, in the culture, in organization, but also in technology. The survey showed that basically 90% of the banks see the cultural challenge quite big. So that's not easy to implement. And from a technology point as well, there it's about 64% in comparison. It is certainly a business opportunity, but it's also a bit of a challenge to have it implemented.
Understood. And there's obviously a lot of things that you said right now, which you want to unpack and go a little bit into detail. Obviously, I also took a look at the study. I was quite surprised, so to say. There's quite an extensive work. It's definitely not a short paper you can just read like this. A lot of insights, a lot of material. Quite curious. That must have been also for you and your team quite a decent amount of time to spend on this. What was your motivation for performing such a study and spending so much time on the topic, specifically on the Swiss market?
A very good question. So it actually all started with a client project. Mm-hmm. I have advised the bank on the board and C-level about BaaS and the related opportunity. And among other topics, we also tried to carve out a BaaS roadmap that fits with the bank's overall strategy and also capabilities. And based upon this roadmap, we also tried to come up with a fair business case that shows that there is some economic potential behind that. And calculating a reliable business case obviously wasn't that easy, as data in the Swiss market wasn't really available. Mm-hmm. So as a result, I could not really answer all the questions in the quality I wanted. And yeah, eventually the lack of data and insights about the Swiss market, meaning about, okay, what is the consumer behavior? What is the adoption? What are embedders doing and so on? This lack basically triggered me to launch the first study about embedded finance and BES in Switzerland together with an academic partner.
Interesting. And that means basically you surveyed with nationals and asked them about embedded finance. Did you have to do a lot of explanation when you asked them about, like, have you used embedded finance before? That's what you wonder about first. Like, would people know what embedded finance is if they hear the term, or is that something you need to explain to them?
That's a very good question. So for all the surveys that we have rolled out in phase 1, which was for consumers, for embedders, for enablers, and for banks, the one for consumers was truly the most difficult one. Because as you suggest, it's not easy to actually explain something without using the terminology embedded finance. Obviously, we didn't use that terminology in the survey questionnaire. So we had to test drive the questionnaire. We did that with a bunch of people to make sure that people understand what they were being questioned. So that wasn't actually that easy. So that's one of the areas that you have to go into when you do a kind of academic paper to make sure that the questionnaires fit for purpose.
Yeah, I always remember back in the days when I was still working in open banking, when people did open banking surveys, it's like, how many people have heard about open banking? It's like, it doesn't really matter if they've heard about open banking. The question is more if they've used it, and you probably shouldn't use the term to ask the question because the term is completely irrelevant. But let's come back to the study, and specifically I want to dive a little bit into the Swiss market. Obviously, I'm German, based in Germany, so neighbor to Switzerland, but for various reasons, especially money, there's quite some differences. So I'm quite curious to hear from you personally, and you might have a view also on other countries, specifically maybe in Europe or US or completely somewhere else. How would you compare specifically embedded finance in Switzerland to other countries? Is it somehow on the same level, comparable? Are there some differences for specific reasons?
This question very much depends a bit on the angle you choose to do the comparison and also the available data. So allow me to answer maybe the question with different kind of views that we can bring in and answer those based on facts and also some figures. So the first angle I would take is is there market research available for a specific region, now Switzerland, Germany, Europe or US or Asia? And what I have found out in the past years when I did research also in the context of this project that I have done, I noticed that there's tons of research in the US, in Asia, and also, let's say, Northern Europe. But in Switzerland, it was basically desert. Nothing was available. So in comparison, Switzerland tends to be a bit more behind. And that's why actually we did the study, right?
Of course.
Then another point that you can look at is the topic being discussed at conferences. Are there articles in newspapers and the like? And in Switzerland, I haven't seen any dedicated conference which is about embedded finance. Mostly we still have conferences about open finance, open wealth for specific topics in the open finance space. In those conferences, sometimes you hear the terminology embedded finance. It's growing now. But in comparison to the States or UK, I saw that they have some conferences which really focus on this topic of embedded finance. Also, if you look at the community, especially you mentioned open finance before, I mean, there's I think a pretty large community, a subject matter expert that meet here and there that talk about the opportunities, the challenges related to embedded finance. In Switzerland, this community is just about to start to grow or to get initiated. And then from the market side, if that's maybe the link a bit to the study, you can look at the number of banks that have already adopted the business model banking as a service, or also on the embedder side. So all the non-banks, the brands, as you referred to it, how many have adopted the business model embedded finance. And I have the data now for Switzerland, obviously from the study, but I would tend to say that Switzerland also, be that on the embedder angle or be that on the bank angle, that the adoption of the business model is certainly a bit behind compared to Europe, the US, and also Asia.
Do you see specific use cases? I mean, you touched on the banks and the embedders, and we can go in a little bit more detail into that as well later. But let's maybe look at the brands specifically, the non-financial brands. You mentioned already, like platform SaaS companies who might be most best positioned to launch such products. Are there specific maybe not specific companies, but specific use cases where you see there's a great adoption around embedded finance products in Switzerland, which is maybe different or the same to other countries?
Mhm. I like this question from different perspectives. First of all, my standard answer is what are the most interesting use cases. My standard answer is basically, well, if I knew the most interesting use cases from an economic point of view, I probably wouldn't tell them out loudly because that's worth some money. But no, I think the answer to this question depends on how you find interesting, right? So, however, for this question, I do have a perspective based upon the Swiss study that I have conducted. I would answer it from two angles. On one hand, from the consumer's perspective, but also in terms of the economic attractiveness for banks and for embedders as well. So if we start with the consumer, the tipping point topic, as mentioned before, payments, pension and investments, those are in that ranking series, the three banking service areas where the tipping point has been surpassed. Payments is at 33%, pensions at 26%, and investments at 25%. That means consumers are ready to consume embedded banking offerings regardless of which embedder type. If we talk about embedder types, what we saw in the study based upon the data that first and foremost, it's neobanks. That is also an embedded finance use case. If it is not a non-licensed bank that provides kind of a neobanking proposition, then the second one is digital platforms and SaaS providers. And the third one is traditional firms. So any firm in any vertical, and traditional firms in the sense of they started with bricks and mortar and over time became more digital and have hybrid kind of service models. But if you go to the economic attractiveness of BaaS for banks, then we could also get some interesting data. And the economic attractiveness is measured by the revenue which is generated in those banking service areas. And from a ranking perspective, it is investing, which is most interesting, then savings, interestingly, then payments, pension, and lending. Now, opposed to that, if we look at embedders, the ranking is a bit different. So there, it is also investing. That's there. It's the same. That's number one. And then followed by pension, lending, savings, and pension. The data suggests actually that investing for both banks and embedders is the most interesting use case on a very global level, if you want so. But if we look at all the other banking service areas, these areas they differ in terms of economic attractiveness. And then maybe there's a last one. Let me come up with that last one because that's also an interesting one. If we look at the economic attractiveness of BaaS for banks, but in terms of, okay, which are the most interesting partners that we can partner with? And in terms of the ranking is as follows. So the digital platforms and SaaS providers, those are the most interesting ones for banks. So those generate most revenues, BaaS revenues, then followed by neobanks and lastly, traditional banks that we also look at in that specific context. And at the very end, it is traditional firms. So that's quite interesting. And this, I really wanted to explain it a bit from this angle because it very much depends on how you look at it.
Excellent. I mean, the numbers are super interesting, especially also like the ranking as you described it. You touched on the financial interest also from banks. I'm quite curious to understand. I mean, you obviously deal also with a lot of banks in Switzerland when it comes to a lot of things, but specifically embedded finance and banking as a service. Understanding that there's a high financial potential for them. How do you think Swiss banks, what their mindset is when it comes to opening up the infrastructure, doing banking as a service, doing embedded finance? Obviously, there are always maybe some who are a little bit further ahead than others, but would you personally say banks in Switzerland get it already and maybe get it more perhaps than in Germany or in other European countries? Or how do you see that?
Well, maybe starting with the second part of your question, I would say other countries outside Switzerland, they are a bit further. They have spent already more time in looking at the topic and so on. And I think generally speaking, even though Switzerland is always depicted as a very innovative overall, banking is also innovative, but banking as a service as a business model, that's quite a step for Swiss banks. Why? The root and the heritage of Switzerland is private banking, right? And in that traditional business model, the direct customer or having the interface to the customer, be that digital or be that physical, was always one of the key elements and also maybe key differentiators, right? Now in BaaS, this is completely opposite, or actually banks are losing the customer interface. And this is a huge change of mindset. So I would say, generally speaking, given this history and this heritage, Swiss banks tend to be a bit reluctant, right? But still, innovative banks in Switzerland, the 35% that I've mentioned before, they're on it. They're not studying it. They have implemented it. They grow it. But yes, there are also almost 65% of banks that do not operate yet a BaaS business model. And we also ask them why. Maybe we can also have a quick look at those reasons, right? So out of those 65%, 25% said, we do not yet understand it. We haven't heard about that.
Okay.
So yeah, well, that seems to be reality and that's okay. And 29%, they have heard about BaaS and they're already in the process of evaluating the opportunity in their strategic context. And 25%, they have analyzed the opportunity and have decided, given their strategy, given their restrictions whatsoever, not to pursue the BaaS opportunity. And that's quite interesting. So I think there is still room for improvement. And there is also, I think, the need to educate the market, both banks, but also the embedders, about the potential of those two business models, banking as a service for banks and embedded finance for embedders.
I mean, I personally have never worked specifically in Switzerland, but I remember back in the days when I was doing open banking here in Germany. And obviously at one point we also wanted to expand to other markets. I mean, Austria, Switzerland and the DACH market, the, let's say, usually most logical ones. So also spent a little bit of time looking into the Swiss market and realized obviously that there's no, I mean, of course we knew from the beginning that European Union regulations such as PSD2 have no impacts. Obviously the market moves very differently. And in a way, embedded finance, open banking is very different. But then again, they might also be tightly connected, right? Because at the end of it, it's about opening up your infrastructure and enabling others. What I, from my perspective, see as a major difference between the two of them, though, is that when the majority of the market does not adopt open banking, you can be safe in quotation mark as a bank because the use cases will just not fly if the majority of banks open up the infrastructure. And if you and all your, or most of your bodies don't do it, there's nothing really that much can change. But on the other hand, with embedded finance, you just need one, in quotation mark, innovative bank that supports some of the use cases. And if this is a really strong one, then obviously consumers will go over there. So I think that the risk on the embedded finance side is a lot higher for banks compared to open finance.
This is spot on. I fully agree. Couldn't agree more. And that's also why we, I think, try to define and differentiate what is open finance and what is embedded finance. And it's not the same in many different aspects. And starting, that's actually one of my talking points. I would really argue that banking as a service for banks, embedded finance for non-banks, for brands, has to be understood as a business model. It has to be looked at as a business model. Whereas open finance, some argue it is a business model. I would tend to argue it's not really a business model, because if it was a business model, a viable business model, it would be, at least in Switzerland, be much more successful, which is not really yet the case, I would say.
I mean, now we have spoken a bit about the Swiss market, understood a bit more what kind of embedders, what the consumers and banks think about it. There were a couple of other points in the study that I found worthwhile diving a little bit deeper, and perhaps not all the listeners have read the study yet, so maybe you can guide us a little bit through it. And the first one I want to touch on is you speak about the maturity levels of embedded finance in specific customer journeys. So when you perhaps can the listeners explain a little bit, what do you mean by the maturity levels and how does it impact embedded finance?
Sure. So first and foremost, I think distributing banking or also insurance products via a non-finance business, a brand, is not automatically embedded finance. I think that's a point that you also pointed out in one of your decks, which actually is spot on. I told you that the other day already.
Thank you.
Really, that's super valuable. So I think maybe we should have a quick look at what is the definition that we used in the study, and then maybe we can, with an example, see what is meant by these different maturity levels. So we tried to define embedded finance as follows. So embedded finance or banking describes a business model in which non-banks enrich their non-banking or finance offerings and related customer journeys with the seamless integration and frictionless offering of banking products and services through APIs. So in essence, the maturity levels we define in the study depend on the degree, how much or to which extent the product life cycle of the underlying banking or insurance product or service is made available through the embedder or brand. So if you make some examples which show that what is not embedded finance, and then let's say the opposite or the most mature level that you can achieve. So let's say you have an online shop that lists out potential buy now, pay later partners at the checkout. So that's certainly not embedded finance. So if you're redirected to something else and there you start a crappy process, that's not embedded finance. If the same online shop also provides at the checkout, let's say an indicative buy now, pay later offering reference to what you have purchased, is also not really embedded finance. That's at least how we defined it.
Yeah.
Let's say if we have an online shop that provides a personalized and binding offering in reference to what you're purchasing, this is embedded finance. So there you have this seamless kind of integration, and you have an offering that you can say, okay, this is binding. I can transact now, right?
It's actually a very good example, right? I mean, like I try to make similar points about other products, but actually the buy now, pay later with the 3 different levels explains quite well how embedded it needs to be, maybe actually called embedded finance.
Yeah. So there's 2 other levels, if I may. So the next one is then not just having like the binding offer, but also having the button basically transact so that you can initiate the transaction in real time, ideally. Then this is certainly a much more mature level. The utmost or the highest degree of maturity that you can get if the entire product life cycle, post pressing transact, because there you have some life cycle events coming along here and there. I mean, generally speaking, not only in buy now, pay later, but if you have a loan or whatsoever. And if these use cases post purchasing or transacting is also made available. So in essence, from onboarding to offboarding, if this is made available through the brand, that's the highest level that you can get. But this is still like a kind of a vision. It's not reality yet.
In a way, you chose BNPL, which I never thought about it, but it's a good example as well. I guess one that I used, which is like quite similar, is these like co-branded credit cards. And when I look specifically at Amazon here in Germany, also in other markets where they have a co-branded credit card, and now they have a new partner. The process is a little bit better from a technology perspective, but it's still not the case that I have my card directly embedded in Amazon and I can everything like manage on there. I still have a separate app, a separate tool to use basically to control it. So it's not embedded, and I don't think you can, or I'm very, very much certain you cannot leverage the same benefit as you could have if you have it like very seamlessly embedded, as you described as well with your BNPL example, with the different life cycle events that happens.
Exactly.
Manuel, we spent now talking like so much about embedded finance. I mean, maybe that's also a good point to ask you the question, like, what's your personal excitement about embedded finance? I mean, I guess everybody has their own journey, but you mentioned before already that you touched on, or that you started with this project with the banks. So obviously there was a business perspective, how you kind of came into the topic, but what was the motivation, also your personal motivation to spend so much time on the report? What motivates Manuel when it comes to embedded finance?
Well, that's maybe a bit of a special answer, but my passion in banking ever since has been the distribution aspect and the customer experience in financial service. I never wanted to become a banker. I always thought banking is actually a bit boring, but the distribution piece and the customer experience part, that triggered really my interest. And when I started my career back in 2000, my first project was actually launching a real-time trading app on a Palm Pilot device. Today, a lot of people don't remember what a Palm Pilot device is, but that was my start into basically digital finance. And then later on in 2003, I started my dissertation about omnichannel strategies and performance management in banking. And I had the lucky situation that my dissertation was sponsored by a tier 1 bank. And so this distribution topic ever since has accompanied my career. And I think now embedded finance is just the next logical step in terms of how banking products and services will be increasingly distributed and consumed. And I think you probably know Christopher Malmer from the Swedish SEB Bank, and he says, bring banking to where it's needed. One could also say bring banking to where it is relevant for consumers and creates value for them. That's also the angle that you take in your definition, right? And exactly. I think embedded finance is so powerful because it eventually creates a triple win. So for consumers, for embedders, and for banks. So consumers, they have a much easier way to consume the financial product in a contextual way. For embedders, for banks, it's basically the business case or the business model that has an underlying business case, as we could kind of prove.
But the move to embedded finance is, I mean, we spoke about banks already, but coming back to that is quite a big one, right? I mean, you described now, or maybe like to put that level deeper, the omni-channel approaches of banks. And if you maybe take a look about the last couple of decades, so to say, where banks started a couple of decades ago, were just like branches, right? And people had to walk into the branch to get financial services. Then obviously the internet was there, and now it was the website, and the bank had to get stuff that's happening in the branch into the website. And then the mobile phone is there. And then it's a new channel, right? Maybe there are a couple of other channels around, but like I see the major channels that banks have gone through. The thing that makes embedded finance is so different, but then now that you have other parties involved, right? I mean, banks, or some banks specifically, struggle quite a bit from the branch to the internet, from the internet to the mobile. And I know plenty of examples where the mobile app looked exactly the same way as the website, and it was not fit for purpose at all. But basically, they saw it just as another channel, and basically have taken the thing that they know from the last one and just copy pasted it into there, right? And now it's embedded finance, from my perspective. Getting into other players, third-party players, is not just like bringing the technology challenge, but also the mindset and strategy challenge into that, which might be bigger than anything else.
I agree. I mean, I said at the beginning, and that's why I stress it again and again, embedded finance overall, but banking as a service for banks, it's a different business model. What you have just described is like this evolution of the addition of digital channels and the orchestration of all those channels which a bank can control when interacting with the client. This is related to the traditional business model where they have the interface, and this is an evolution of the business model. But banking as a service, as we have now discussed, that's a different business model that also requires a completely different operating model, which means culture, mindset, processes, organization, technology, and the like. And that's what we have looked at the study as well. And as mentioned, that means a bit of a change for banks, and that's not that easy, I would say.
And it's probably also fair to say, I mean, you mentioned already SEB as an example, and of course they have the unit SEB Embedded, where they do exactly that, banking as a service. It's one example. There are a couple of other ones in Europe as well. But in a way, like very, very directly saying, if I as a bank, and I could be SAB or somebody else, if I serve a customer directly without a non-financial brand and embedded finance use case, probably my revenue potential with that customer is a lot higher if I do it directly, right? And now basically I make the choice to get somebody else involved, like offer up my infrastructure, serve that client perhaps in a better way, but most likely also, at least on that transaction, maybe a little bit lesser revenue potential for myself. And now the question is like, I mean, do you agree with that statement? And also, I mean, we always know the statement of like, you should rather cannibalize your own profit or revenue before somebody else does it. But it's always easier said than being done, right? Because I think reality, if you're sitting then in the rooms with the bankers to make sure that that mindset is adopted, probably doesn't take days or weeks or months, but probably rather years.
So again, I think what is really key in that discussion is that, and we stressed that also in the study.
Yeah.
I think banks should look at banking as a service as a business model which is complementary to the traditional one. I think it would be completely wrong to say, okay, embedded finance is now here. Banks should shut down their traditional business model. That's not the case. I think it's an evolution, meaning that BaaS will probably become more and more important. I think that's what the data also show. Some people say BaaS is going to be the dominant business model. One core banking provider CMO stated that about 1.5 years ago, Temenos, I remember. So this is yet to be proven, but I think it's not an either or in terms of business model. It's doing both. If the capabilities and also the will of the board and the C-level is there in terms of mindset and so on, because again, it's a different business. It's really a different business and with different requirements to be successful.
I agree. Manuel, you mentioned earlier already that I think you said 3 out of the 5 financial products have reached a tipping point. In your words, those are these products that have more or less like mass adoption already from the consumer perspective, are accepted to consumers through an embedded finance environment. I guess another way to look at this is this could be like hype cycles. So a lot of different concepts when looking at like new trends. Embedded finance as a whole in Switzerland, where would you put that in the cycle process? Are we already in a way where this is a mass topic, or is it still somehow in between turning from a niche into a mass topic?
Well, the question in the study, when we talk about trends or innovation, as you mentioned, we had the theoretical framework, which is the theory of innovation diffusion. And that's the one that says you have innovators, early adopters, early majority, and so on and so forth. And that was the concept that we looked at based upon this concept and the data that we could get out of all these surveys. We saw that 3 out of 5 banking service areas have surpassed the tipping point. From a consumer point of view, there is a very high chance that this trend will continue. That's why this reference point, the tipping point, is the one that says, okay, if this is surpassed, then it's very likely that the adoption will further grow. So from that angle, I would answer the question that the topic has certainly a lot of potential because it starts with the demand side always. In our study, we basically said the consumers and the embedders are on the demand side of the market, and the banks and the enablers that we also looked at, but we don't talk about that right now. And that's at the supply side. And we always wanted to understand the demand situation. And given the data that we have, I would say it's not just like a trend that will go away near soon. I think we are going into a phase where the adoption will steadily increase on the consumer side, and on the supply side. I think banks, or at least some, will certainly jump on the train and see how they can make business.
Okay, then final question for the podcast. You described now that like how you expect the market to grow. If I were like kind of putting some numbers towards it, and let's say how is maybe specifically the Swiss market developing over the next 1 to 3 years, and how it's going to look like in like 5 to 10 years. Do you have any of course it's a crystal ball question. None of us not really know, but based on the study that you have performed and got a lot more insights, spoke to a lot of people, do you have some predictions in what direction it could be going and how the world could look like in those 2 different time periods?
Yes, a bit predicting, as you say, is a bit of a challenge, but what I can do is try to make some kind of an educated guess based upon the study, the data that we have, and with a good portion of my gut feeling.
Of course.
So in the short term, so 1 to 3 years, I think overall, so from an overall perspective, embedded finance as a strategic opportunity for banks, for non-banks, and the Swiss economy overall is understood by the various stakeholders. The discussion will have shifted from open finance to embedded finance.
Mm-hmm.
And I think that not only banks and non-banks that are primarily affected on the business model level, I think that also government authorities, regulators, association will foster and promote the growth of embedded finance because it's an opportunity for many. If we look at it from the consumer point of view, I would say bluntly that more and more consumers will access financial services through non-banks, but the adoption certainly increases significantly and hopefully across all the different banking service areas. The highest growth, but that's not substantiated by data. That's my personal gut feeling. I would predict in payments and lending. And lending specifically probably in the SME area, so the small and medium enterprise. That's an area that I find personally quite interesting. We haven't looked at that in the study, just to be clear. Then looking at the embedders, I would say that more and more businesses will have understood embedded finance because that's not yet the case in Switzerland, and put it into practice step by step. They try here and there with kind of use cases could make sense, would pay back and so on. And they have developed a more or less clear roadmap to further grow the business and make it really economically interesting for them. Then lastly, on the bank side, I mean, currently we have 35% of surveyed banks that do banking as a service to complement their portfolio of business models. I think the competition, as more will start to also do banking as a service, competition will increase steadily. And I think banks start then also to focus maybe on certain verticals and banking service areas because it's their sweet spot that makes sense for them. And also we already see that outside Switzerland and also already a bit in Switzerland, that banks will partner with professional services firms, consultancies and the like, to scale their BaaS business and to get access to non-banks. That's SCV is doing that as well already. So that's always a good indicator of what makes sense. Yeah, true. And if we switch maybe to the longer term perspective, obviously it's a bit more difficult, but
or easier because you can.
Yeah, because it can be anything, right? No, I think, I mean, I have some opinion, but that's not, again, this is by no means substantiated. This is just gut feeling. But I think the adoption, so from a consumer's perspective, the adoption of embedded finance offering will shift towards more digital platforms and traditional firms, which currently are ranking last. Why? Because they have not really looked at the business model on a broader scale and so on. But I think there are really opportunities. I would say that once these offerings are available from trusted brands, trusted non-banks, I think adoption will, relatively speaking, take place there more. And on the embedder angle, as there is really some room for improvement in Switzerland, I think that will significantly increase. In case what I mentioned on the short-term perspective, if all the stakeholders that make the topic a topic on the strategic agenda, if this takes place, I think embedding financial services, be that banking or also insurance product, will be a kind of new normal. And lastly, in the perspective of banks, I think the competition among players, among the banks that offer BaaS, will increase. And I think technology then will become even more vital to scale the business in a profitable, because technology is really essential. I mean, next to the mindset and all that kind of stuff, but this will at some stage be clear how to deal with it. But the technology, having the proper technology stack to do that in a scalable way, I think that will be critical. And maybe some banks, this is already the case, but not in Switzerland, they will probably build their BaaS stack as SEB has done it, as Audex, meaning Standard Chartered, has done it in Asia. This will also happen in Switzerland.
Super interesting. Thanks, Manuel. You touched on one of your answers for the prediction. You said as well, education and understanding from all these different parties is like super crucial. So hopefully this podcast episode helped a little bit as well with that. Obviously, we've spoken a lot about your study. Maybe you can also highlight where an interested listener can find the study, and perhaps if also somebody out there wants to reach out to you, maybe there's also a channel where somebody can ping you if you want to share that.
Sure. So the study can be downloaded at www.embedded-finance.ch. What else? That's probably the most adequate website you can have. That's why we have it. And people can reach me just via LinkedIn. I think that's probably the most relevant channel for me.
Perfect. Thank you, Manuel, for all the insights. I personally can say I learned quite a bit about the Swiss market, about the developments of an embedded finance. Yeah. And you made some predictions over the next couple of years. Maybe we can record another episode in a couple of years and see where we stand.
Deal. Let's do that.
Awesome. Thanks, Manuel. Until next time.
Thanks for having me.
Thank you for listening. For more episodes and our weekly newsletter, please visit embeddedfinancereview.com. And please reach out if you have an interesting embedded finance story to tell. Until next time.